So guys, I've been keeping a secret from you these last few weeks. I actually started a new position in the portfolio. It was kind of a snap decision, which I'll explain later, but in this video, I'm going to tell you all about this new investment and why I decided to buy it. Without beating around the bush, this new position of mine is a company called Clear Secure, ticker symbol U. And you may not have heard of the stock before because it's pretty under the radar, but I'd be willing to bet that you do know the company, especially if you spend any time in an airport. You know when you're going through security and you get in the line where the TSA agent checks your ID and boarding pass? Well, instead of waiting in that line, which as you probably know can sometimes take quite a long time to get through, Clear has its own special lanes that let you bypass all of that. In the Clear lanes, you just do a quick biometric scan to verify your identity, and once that's done, a representative takes you straight to the front of the security screening area, which can save you a lot of time and a lot of frustration, especially during periods where the airport is especially busy. And although airports are the company's bread and butter, at least for now, Clear service isn't just limited to airports. You can also find this company at a handful of different stadiums and event venues around the country, like Allegiant Stadium and T-Mobile Arena here in Las Vegas, where they allow you to use the same biometric identification process to get through security when you go there for an event. So in a nutshell, Clear is all about streamlining the identification process and can be applied really wherever it needs to be done. And what I think is really cool about this company is that they're expanding to other areas like healthcare and finance. Similar to how Clear speeds things up when you're at the airport or going to a Raider game, it can do the same thing at hospitals and doctor's offices. So instead of showing a driver's license or insurance card, you can check in for your appointment using your biometric data, which also eliminates the need to fill out all those forms because they can use your biometrics to match you to your medical records. Now in finance, Clear actually has a partnership with Public, which is a company I'm sure you guys have heard of. It's one of the more popular brokerages out there. But through this partnership, you can actually use Clear to verify your identity when opening up a brokerage account. And there are still so many other use cases for Clear, like for example, they've tapped into retail through a partnership with Home Depot, where you can use Clear to verify your identity when renting tools. And interestingly enough, Clear's CEO actually sits on the board of directors at Home Depot. At any rate, wherever you use Clear, it's really all about enhancing convenience and security, which for a lot of people is worth paying for, especially if it directly improves their experiences in places that tend to not be so convenient, like busy airports or doctor's offices. With Clear, they can move through these traditionally clunky processes more securely and with minimal hassle, and the convenience of avoiding lines and reducing stress makes Clear service worth paying for. And on that note, one big plus about this company is that the great majority of their revenue is subscription-based, and as we can see, membership is growing at a pretty substantial rate. But anyway, guys, now getting into the good stuff, this is what my position in Clear is looking like so far. I only started buying it a couple weeks ago, so the position's not super big at this point. I only have 21 shares, and my average cost per share is $32.31. So I have, just under $700 invested in this company so far. And in the short amount of time I've owned it, I have seen a slight decline. I'm down about 3.6%. And by the way, guys, what we were just looking at was from Snowball Analytics, which is actually the sponsor of today's video. This is a really cool portfolio tracker that I've been using a lot lately, and I want to tell you a little bit more about them. One of the most essential tools for any investor is a solid portfolio tracker, and Snowball Analytics is like the Swiss Army knife of portfolio trackers. I've been using this platform to track my own portfolio for a while now, and I'm extremely impressed by just how much insight it provides into my portfolio. As you can see, the layout is very clean and intuitive, and I found the platform pretty easy to navigate. Plus, it's packed with more charts and graphs than you can count, which speaks to just how much insight it offers not only into your portfolio, but also at the individual stock level as well. Pretty much anything you want to know about a company's financials or dividend history can be found here within the platform. Now, in my opinion, what really sets Snowball Analytics apart are the features it has designed specifically for dividend investors. I'm actually convinced that this platform was made for us, and here are some of my favorite features. First off, Snowball tells you your total returns by default throughout the platform, which may sound like a small thing, but it's crucial for dividend investors because it doesn't neglect the dividend income we receive when calculating returns. Most other portfolio trackers will only show share price returns, which really is only half of the equation, so it's refreshing to see dividends factored into these calculations. Additionally, Snowball also has a pretty robust event calendar that keeps you updated with upcoming news, events, and dividend payments. They even have a dedicated dividend calendar so you can see who's paying you each month, when they're paying, and how much they're paying. And then another favorite feature of mine is Snowball's backtest tool, which lets you see how your portfolio stacks up against the S&P or any other benchmark across multiple time periods. And once again, dividends are included in the calculations, which is awesome. So overall, if you're looking for a great portfolio tracker, which once again is something that every investor needs, I highly recommend you check out Snowball Analytics, which you can actually do for free. All you need to do is click the link in the description or in the pinned comment, or just scan this QR code right here to get a free 14-day trial. And if you like it, you can save 10% on your subscription using the code Ryne Williams. I've personally really enjoyed using Snowball Analytics, and I know you will too, so definitely check out that 14-day trial, and don't forget to use the code Ryne Williams to save 10% on your subscription. Anyway guys, getting back to it, I briefly mentioned this at the start of the video, but buying this company was kind of a snap decision. I first heard about Clear in one of Russ's recent videos, and I didn't even know this company was publicly traded, but it sounded really interesting. And after watching this video, I immediately dove in and spent like the rest of the night learning about this company. It was one of those things where the more I learned about it, the more that I liked it. And after thinking about it for a couple of days, I decided to just pull the trigger on it and start a position. You know, historically, I've been extremely slow to pull the trigger on certain stocks, like Rollins, for example. So with this one, I decided to take the complete opposite approach. And I wish I would have found out about this company like a few weeks before I did, because as we can see here, guys, right before I bought it, this stock just saw a crazy run up from the start of August until today. It's up 50.5%. And as we can see from these bullet points right here, these are all of my purchases. I'm pretty much buying this stock at all-time highs. I'll tell you what though, despite this crazy run up, I still don't think the valuation is all that bad, especially considering their free cash flow yield is still at 14.6% in the trailing 12 months. So that's still incredibly high. And the price to free cash flow is very low at only 10.7. It's not too shabby for a company that's growing as fast as this one. Plus, it's still a relatively young company, having only been on the market since 2021. And like I said, the growth has been astronomical so far. Still over here on Snowball Analytics, just taking a look at some of the financials. I mean, just starting with the revenue, this has been pretty crazy over the years, guys. From 2021 to 2023, very substantial revenue growth, going from, you know, 250 million to over 600 million. And in the trailing 12 months, it's even higher. They're close to touching $700 million. And then looking at the earnings per share, yeah, you know, for most of their history here, their earnings is negative, so they were losing money, but they just became profitable last year. In the trailing 12 months, those earnings are growing as well. And I'll tell you what, considering this company is still so young, it's not at all surprising to see their earnings negative for this time period. That's actually a pretty standard feature for companies in this younger stage of the life cycle. And now jumping over, looking at the free cash flow, this is looking really good as well. Since 2021, this company has generated free cash flow, which is great. And this obviously bodes well for the dividend, which, as we can see here, the dividend is very well covered from their free cash flow. I mean, 2021, the free cash flow payout ratio is less than 50%. Same thing here in 2022 by a long shot. 2023, we see a lot more dividends being paid out, but still that dividend is very well covered by the free cash flow. And in the trailing 12 months, a similar story as well. We see a free cash flow payout ratio still less than 50%. Plus, debt is not an issue whatsoever from this company. As we can see from the most recent quarterly report, they actually have no outstanding debt obligations, which is one of my favorite things to see. I'm an absolute sucker for a company with no debt. And having said all of that, I think this company has all the makings to be a really great dividend growth stock moving forward. And so far, they've been very generous with the dividend, paying out a special dividend every year for the last couple of years. Still though, to be fair, just like any company, Clear Secure is not without its risks, and here are a few of them as I see it so far. The first one is customer retention. Now, as we can see here, it's still high, but it has dropped quite a bit in a pretty short amount of time. And if that keeps heading south, it indicates that customers aren't finding the service to be that useful. Now, the second risk comes from potential bottlenecks at airports as more people sign up for the service. While Clear's main value proposition is speed and convenience, if too many people are using Clear at once, it could ironically create the very issue that the company is trying to solve, which is longer lines. But anyway, the third risk, and this is a big one, is that Clear could be a prime target for cyber attacks due to the highly sensitive nature of the data they store. Since the company stores biometric data like fingerprints and eye scans, as well as personal information such as names, addresses, and potentially your payment info, they are responsible for securing some of the most personal information you have. Now, if that were to get into the wrong hands, that could completely ruin the trust the company has with its customers, which could result in some pretty serious litigation and could also result in customers canceling their memberships en masse, which would completely ruin the company. At any rate, as far as my plan with this stock, obviously I only have a small position at this point, and from here, I just plan to dollar cost average into it until it reaches about, maybe 3 to 4% of the total portfolio, which would put me at around 100 shares, which I think is a nice even number to shoot for. So that's what I'm going to do. And overall, I'm really excited about this company. I think it's a very interesting one. And if you want to learn about some more very interesting companies, then check out this next video right over here. In this one, I'm telling you about 4 dividend growth monsters who are not only growing their dividends at very aggressive rates, but that dividend growth is actually getting faster over time, which is awesome. So click right over here to check those out, and I'll see you in the next one.